for right now, because of that sell signal being in place, look for the market to kind of just get stuck here temporarily until we get the sell signal flip back over, because we just simply have a surge of sellers here that are meeting the buyers at the price. So here's what you need to know before the bell this morning. Last week we'd gotten very deviated above that kind of that 20-day moving average, and we've been talking about here that we needed a little bit of a correction. Well, it kind of just snuck up on us all at once. 3 days of a pretty sharp sell-off that took us down below that 20-day moving average. So again, normally when we break that 20-day moving average, that's kind of the first inclination that, hey, you know what, we're likely going to start a correctional process here of 3 to 5%, somewhere around there, unless the market can get back above that 20-day moving average, which it did yesterday. So yesterday's rally in the S&P was fairly strong. Got the S&P back above that 20-day moving average. The leaders yesterday, of course, were the mega caps coming back, that kind of that trade, rotating back towards the mega caps. So we saw them rally yesterday, got us back above that 20-day moving average. So that negates the break at the moment. So right now, all we've had is simply a retest, a successful retest of that 20-day moving average. So that keeps us right now within this bullish trend. And so previously, we've seen these tests of the 20-day moving average before, and then the market continues to grind higher. Now, one of the differences here right now, and again, we kind of look back at where we were previously. So we had come down here in June and tested, actually broke the 20-day moving average, right? Exactly the same process. Next day, market rallies back above that. And we had triggered a sell signal during that process. Same thing that we've got here. So we have this sell signal in place, which may limit the upside temporarily. And that's kind of what happened here for a few days. Markets kind of really just kind of struggled sideways for a bit. And then we flipped that sell signal back to a buy. So we'll see if this occurs again. If we can flip that buy signal, that sell signal back to a buy signal, that's going to suggest that this little corrective action is over and markets are going to kind of continue to grind higher here over the short term. But for right now, because of that sell signal being in place, look for the market to kind of just get stuck here temporarily until we get this sell signal flip back over, because we just simply have kind of a surge of sellers here that are meeting the buyers at the price. And so again, we're kind of got most of that overbought condition worked off. We flipped that a little bit yesterday, so there is some buying pressure coming in here after this correction. Again, not surprising. We had this correction in the mega caps, very much needed, as we talked about before. Everybody got excited about the mid cap, small caps on the rotation, but now the market seems to be rotating back towards those mega cap stocks, which makes sense because that's where all the earnings growth are going to come from as we go forward through the rest of this year. But again, nothing here supports the idea that we've got a much bigger correction coming. I still expect, and this hasn't changed, we still expect a 3 to 5%, maybe even a 10% correction sometime between now and the election. That's historically and statistically kind of how things work out. But again, things can always do differently. We can just kind of keep grinding higher here in the near term. We'll see what happens. But this is why we just want to navigate the markets for what we have. Don't overreact. Small movements in portfolios. Again, we took some profits last week. Now we're going to wait and see what the market tells us to do next. We advise you to do the same. That's what you need to know before the bell this morning.